Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're debunking 3 common Social Security myths and giving you the actual facts so that you can make the best decision for your retirement and maximize your Social Security benefits.
Yeah, Michelle, Social Security has to be the number one topic that I've dealt with in nearly 25 years as a financial advisor. As retirement gets closer, understanding Social Security benefits becomes crucial for those planning their financial future. The problem is all the misinformation out there on Social Security, which can lead to unnecessary worry and can lead to mistakes that could cost you hundreds of thousands of dollars over your retirement and may even hurt you when it comes tax time.
Yeah, something you want to get right. So let's get to it. What is the first myth?
Right back into the taxes. Myth number 1 is that Social Security payments are not taxable. This is inaccurate for many of you. If your only income is Social Security, you don't even have to file a tax return. But for those of you that have additional income, Social Security benefits are subject to income taxes and is progressive.
Okay.
The higher your income or how much you have coming in that is taxable, the more taxes you're going to have to pay. And these taxes you must pay on your Social Security income depends on that income. In addition to your Social Security benefits, your income might be your wages, self-employment income, interest, dividends, or other taxable income that you need to report on your tax return. And the IRS has some specific rules for this. If you file your taxes as an individual and your total income is between $25,000 and $34,000, you may have to pay taxes on up to 50% of your benefits. And if your total income is more than the $34,000, you may have to pay taxes on up to 85% of your benefits.
And we're talking about federal tax laws here, correct?
Yes, that was federal.
Okay. So it's important to also point out that in addition to federal taxes, you may owe state taxes on your Social Security benefits. And there are 12 states that also tax. So that is Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, Rhode Island, Vermont, Utah, and West Virginia.
Yeah, you'll need to check with your state if they tax your Social Security benefits and by how much. And suggestion, do it before you claim your benefits so you have an idea of how much you have to pay and figure out now how to lower that tax bill.
Right, or move states.
Move.
You could also plan for that too.
We could do
all right. So all joking aside, we're going to drop a video below. Check this one out. It's a Social Security specific tax video where we give you the formula on how to calculate how much taxes you will owe, if any. So do check that out. It'll be in the description below. And also while you're at it, if you like the content thus far, hit that like button and don't forget to subscribe.
Definitely.
All right. So Brian, let's move on to the second myth.
Yeah, another big myth is the belief that ex-spouses are ineligible for Social Security benefits, and that is not true also. There are circumstances under which ex-spouses can indeed receive spousal benefits.
Okay, talk us through that.
Yeah, Michelle, this I used to do a lot of Social Security stand-up workshops at the local libraries, and this was always the number one topic because the young ladies were always high-fiving each other and going out for drinks afterwards. And here's why. To qualify, if you're divorced, your ex-spouse can receive benefits based on your record, even if you have remarried, and vice versa. They can receive benefits on your record if your marriage lasted 10 years or longer and your ex-spouse is unmarried. Your ex-spouse is age 62 or older, and the benefit that your ex-spouse is entitled to receive based on their own work is less than the benefit that they would receive based on your work. Also if you're entitled to receive Social Security, retirement, or disability benefits.
So do you have to, all of these have to be a qualification? I mean, all of these have to, so you can do this. It's just you have to be married. Marriage had to have been 10 years longer.
It's very common. Very common.
Okay. All right. Got it. All right. We're going to drop a video that we did a deep dive into claiming spousal benefits. Check that in the description below. All right, Brian, let's move on to the third and final myth.
Myth number 3 is that Social Security is going bankrupt or not going to be there when it comes time to file for benefits. Folks, Social Security is not going bankrupt. Some headlines may make it sound that way, but they are so misleading. Social Security has 2 ways of getting money. One from payroll taxes by employees and employers, and also from the Social Security Trust Fund. Payroll taxes are the main source of funding. When you pay into Social Security from our paychecks, that money is used to pay the benefits of current retirees. Payroll taxes cover about 76% of the program's total cost. And the Social Security Trust Fund is like a savings account. It had about $2.8 trillion saved up at the end of 2022,
Mm-hmm.
and it's required by law to invest in U.S. Treasury bonds, which are backed by the U.S. government. When the trust fund needs to pay more benefits than it gets from taxes and investments, it uses some of that saved money. The trust fund is expected to run out of money in 2033, but that doesn't mean that Social Security will be bankrupt. That's because there's still more money coming in from payroll taxes
Right.
every day.
Yeah, well, there's a whole lot of people watching this who would probably disagree.
I
Just
understand
from the
that.
comments that I see on our videos about Social Security, I
Yes,
know many people do take Social Security benefits early because of this fear.
they do. That's one of the number one reasons why they take early Social Security benefits. Here's the thing. Taking early Social Security benefits is a personal decision. But if
Right.
you're making the decision to take early benefits based on this fear alone, it may cost you tens or even hundreds of thousands of dollars by claiming too early. Retiring before if you retire before you reach full retirement age of 67 for those born 60 or later, it's going to result
Born in
in,
1960, you mean?
1960 or later.
Right.
It's going to result in a reduction in monthly benefits. It's that simple. For each month that you receive Social Security benefits before reaching full retirement age, your benefit is reduced by a fraction of a percent. The reduction could be as high as, Michelle, 30% if someone starts collecting benefits at 62, which is the earliest age you can receive your benefits.
We're going to drop another video. So now this is the third video titled When You Should Take Early Social Security Benefits, when it makes sense. So do
Right.
check that out along with the other videos listed below. And while you're at it, like I said, hit that like button and subscribe. Brian and I are always putting out videos on Social Security, keeping you informed, like if there's new legislation, etc. So make sure to subscribe. So Brian, before we wrap this up, anything else you want to add?
Yeah, these are just 3 myths of the many that are out there. Folks, this is all about you. So come back to the channel. If you got a question that doesn't seem right, or you keep hearing one thing pop up, drop it in the comments below in any of our Social Security videos and we'll respond back to you.
All right. Sounds great. Thanks, Brian, for this. And thanks to everyone who watched.
Thanks, everyone. Have a great day.